Shout out to you guys over the Discord that made money on those DKS puts today. All right, those of you who held in longer than I did, you guys were rewarded. Now, if you want to join us over the Discord, link is in the description below for you guys to go ahead, do so, make some money in these markets with us, and we'll see you guys on the other side. Now, I want to hop on here, talk to you guys about these markets, crazy markets that we're in right now. Okay, so first of all, regardless of what else is going on out there in the markets, what you guys need to know is that corporate earnings are actually strong. Now, corporate earnings have been a driver for these markets over the last 18 months. And we've seen today, like a Microsoft, come out, deliver some phenomenal numbers, showcase to the markets. Corporate America isn't dead, it's still alive, it's still kicking. These companies are still pumping out massive levels of revenues, massive levels of profits. Before the Fed speech, Microsoft itself was pretty much carrying the entire market. Now, this is a good setup for what is to come over the next couple of weeks. We've got some heavyweight earnings coming up, Tesla, Apple, Google, and I'm expecting great numbers from Google. And they could also help push this market along, cause some stability, put in a bottom in these markets, and see a little bit of recovery in prices. All right, so earnings are still very good. And we've seen American Express, IBM, so tons of companies have actually delivered and showcased that they are performing well, they're growing at good rates, okay? We just have a couple of these headwinds like the Fed situation, which I want to speak to you guys about now, because there was nothing really said that should have surprised the market. Everything that was said we've heard before. We know rates are going to go up. We know they're going to be cleaning up the balance sheet. Guys, these type of things shouldn't have caused the type of reaction that it did. But right now, what you guys need to know is the stock market is driven by emotions, okay? Lost track of fundamentals, lost track of business performance, growth, things that actually matter. It's all about emotions right now, fear, and that has just clouded the whole market's mindset. So anything related to fear or FUD in the markets creates these massive intraday swings, these sell-offs that we're seeing in the markets. But I want to let you guys know this is temporary. This is a temporary fixture in the markets. It will go back to normality, all right? So this is the type of situation where those smart investors, the wise ones, are taking advantage. One thing you guys need to realize is what we saw today. We saw an everything rally at the beginning of the session. We saw every stock, every sector pumping in the beginning of the session. So when we eventually do put in the bottom in these markets, this is the type of movement we will see, all right? This is the type of thing that will present itself in the markets. Massive green days. We will get these back-to-back green days, and that relief rally is on course at some point in the time in these markets. I pretty much thought the relief rally was coming this week in the markets. Maybe it's a little bit delayed, but we will see these green days, some positivity and upwards movement in the stocks. Stocks are grossly oversold right now, right? Definitely don't deserve the treatment that they have been receiving over the last couple of weeks. See prices come down heavy pretty much across the board in all sectors, right? So the market is well overdue a bounce to the upside. Now, when you guys are going about picking up stocks in the market, you need to show some discipline in the sense that when we have these green pushes, these green days, these green intraday movements, you don't want to be sucked in and drawn and start getting FOMO and buying in higher than you need to. Really and truly, if you're going to buy stocks in these markets, it needs to be in the red, okay? You need to show some discipline, because what could happen is, you've seen it several times this week now, a swing from green right down to red. So if you show some discipline and get in these stocks when they're actually red, it's going to serve you better. You're going to make more money in doing that, right? So discipline is key in these markets, because the swings just keep coming day after day. So before I close out, guys, I want to say that, answer the question of, are we going into a deeper crash or correction in these markets? I don't necessarily think that's the case. Reason is, guys, corporate earnings are good enough to support and hold up these markets. And in addition to that, we've seen prices come down heavy. The market is no longer priced to perfection like it once was. We're seeing prices down at low levels. Some of these stocks are down at multi-year lows in terms of the valuation, and have come in line with 5-year historic valuations. So the valuations are looking good. So they become more attractive to the marketplace, more attractive to buyers. and we know growth rates are still good. Take Microsoft, for example, growing like 20%, okay? That is a phenomenal growth rate for a company of its size. And over the next couple of weeks, we'll get companies like Google and others showcasing that they're growing well and they are on track. One thing you guys need to bear in mind is, even if we were to get a relief rally, again, don't be drawn into that, because what I'm expecting is these companies to show a little bit of slowing down growth in Q1 and Q2, causing prices to come back down to cheaper levels. Okay, so you're gonna have multiple opportunities this year to be picking up quality stocks at good price points. Okay, so I just want to hop on here, talk to you guys about these markets. So you're seeing some crazy swings, and that's the name of the game, heavy levels of volatility, but you can use this to your advantage. This is a period where we just need to get over the fact that the market is just driven mainly by emotions right now, and just get back on normal course where things like earnings, growth rate, overall economic growth matter. All right, guys, so that wraps up for this one. If you want to join us over the Discord, link is in the description below. Tap in. We'll see you guys on the other side. Catch you guys on the next one.